Okay, hi guys, Nick here. I did promise a few days back that I would do a basic training on Fibonacci and using Fibonacci retracement. I don't claim any special knowledge or that I'm, a guru on this. I'm getting it all from Curtis Kobane, who's one of the crypto educators, and in my opinion, his training on using Fibonacci is probably pretty much better than anybody else. There's just a little bit more detail that I think is, really useful, really understanding all the levels in the Fibonacci retracement tool. So with that said, I'm just going to start sharing my screen and just go through some basics to start with. I'm just really hoping I don't get stuck and forget anything while I'm doing this. Okay, so let's just bring up. Okay, so I'm just bringing up my screen here, and let me just move this over a little bit. So you'll see here, right? Let's start from the beginning. Let's take that off. Let's remove that, and what I'm going to do is, oh, go away. Right. So, okay, so you come over to the left-hand side and you've got various options here. And if I click on the third option down, you'll see you've got these various tools here. So I'm going to click on Fib Retracement. And then I'm just going to draw, it out here. So you click on the screen, pull it down or up, and I'll go into detail of how you do that in a second. But first things first, I just wanted to go through, because different educators will have different levels on their Fibonacci retracement tool, and they'll use different colors, etc., etc. So Curtis Kobane uses this setup. So you've got at the bottom, you've got 0, which is in light blue. He's got 12.4, which is in light blue. Then he has 12.36 in white, 38.2 in white, 50 in green, 61.8 in yellow, 78.6, I think that is, I'll check that in a second, in red, 83.5 in purple, 88.6 in red, and 100% in light blue. So if yours is different to this and you want to change it to match this, you can do. Obviously for the purposes of this education, I'm doing what Curtis Kobane does, so I'm going to be using his settings. So if you wanted to copy these settings, you simply put the cursor over one of the lines, right click, and then you come down to settings, and then it brings up the various bits and pieces. So I'll just go through again. So we've got 0 in light blue, 0.124 light blue, 0.236 in white, 0.382 in white. Then we've got 0.5 in green. So that, and then you've got 0.618 in yellow. 0.618 in yellow. Now I'm going to just explain something. I've got it set up to show the percentages. So at the moment, I'm just showing you the numbers that you have to set up, and then I'll show you how you change it to percentages if you want to do that. 0.786 in red, 0.886 in red, and the 0.835, which is between them in blue. And then we've got 1 in blue. Let me just scroll down so you can see that. Oh yeah, the one in blue is there. So now another thing, there's various things you can have. Like a lot of people, when you bring up Fibonacci, you get all these colors of the rainbow in the background. Now I find them distracting, and Curtis Kobane doesn't use them either. It just seems to, for me, it just blocks out a lot of the chart, and it's hard to see when you've got it up with price action in the background. You can't see it. So I've got them the background down, faded down to 0, so I don't see any of that. I've got the levels. I use percentages. You can have them as the values so that they will match exactly what you saw in here. I prefer them as percentages. And then you have various choices. You can either have the numbers on the right or the left. As you can see, they just shifted over, or you can have them in the middle, which doesn't make a lot of sense to anybody because you can't actually see them. So I've got them on the right. And also you can then put the numbers, do you want them above the line, below the line, or in the middle of the line? Again, I don't know what, what great difference that makes. If you see there, they shifted up a bit, or if I put them at the bottom of the line, they shift down. I've got mine set to the middle, but you can do what you like with that. So hopefully you've got all those settings. If you want me, I've just put them back there so you can see them. You can always take a screenshot of this or just jot down all the various levels as you see them there. Okay, so that's the start off point. We've got our Fibonacci and we've got our various levels, and I'm just going to take that off the screen for the moment. Let's remove that. Now, what I've just drawn here is I'm just doing some basic lines to show. So we've got an uptrend, then which is this one going up, and then we've got a retracement here, and then it's retraced to this level and going up again. Okay, so when you're drawing your fibs out, if you're drawing if you've got an uptrend, you're looking for where price will retrace down and then go back up to the uptrend. So you're looking for a buy essentially in that situation. So when you do that, you draw your Fibonacci from the low to the high. And what they, to remember that you just say, and I have to click again just to set it at the top there. So what to remember that they say low to high, looking for a buy. It just rhymes and it helps you remember. And obviously the reverse is true. If you're looking for a sell, you're going to go high to low to see how low you can go. Is the rhyme for that one, and that's when you're looking for a sell. So you're putting your Fibonacci up here. So price has been going up and up and up. There's been a retracement and it's come back down here, and as it happens, we've got that in the sort of in this zone here. I'm sure there's a way of doing that, so I don't have to keep doing that twice. But anyway, so you'll see the retracement came down here between the 50 and the 60, and then price headed up again. Okay, so that's the basic. That's the basic what you're looking for in terms of price action and how you draw your Fibonacci. So in other words, if I just take that off for a second, remove that. Let's say we were doing the reverse. Let's remove that for a second. So let's say you're in a downtrend here. Let's move that out of the way. You've got a downtrend coming down here, and then you've got a retracement here that's coming back up, and then you're looking for market to carry on back down from there. So in other words, the price is going down, it's retraced up, and you're looking opportunities to sell back down with the trend. So in that instance, you take your Fibonacci scale and you put it on, you'd start from high to low. Okay, because we're looking to see how low it will go. We're looking for a sell opportunity. So price has come down, and then so we put the fib on, and then price retraces up, and we look for the level to see when it's coming down. So in other words, if I just take that off for a minute, just remove that off for a minute. So in other words, you've got price action here. Let's put that there or whatever. Maybe a bit there. Oops. let's put there, and you've got this option here. So in other words, price has been coming down, and then it's retreated to there or whatever. So essentially, when you've got this downward market, you're looking for when price has sort of gone to a low point and it's created this low, and then you'll take your fib from the previous high down to this low. And so once price starts to retrace and starts to go up here, we can see, you know, where it's going to go to on our Fibonacci's retracements, to see where we might find opportunities to put in a sell. Okay, so now what Curtis Kobane teaches is, you know, he puts in this 12.4. I'm not really sure so much that's that important. It's just to get an idea that it, you know, we've got, you know, once it goes past that, we know we've got some retracement going on. Now, here's the important thing about the different levels, right? The 23.6 to the 38. This price can sort of reverse from there, and if price only goes to there, and then starts to continue on its downtrend from there, what we know is then that this shows us a weak, that the trend, sorry, is strong. This downtrend is strong because it only managed to retrace up to between the 23 and the 38, and then it's continued on down. So that shows you that this is one of the important things that I don't think a lot of people talk about, that is that the different levels in terms of the Fibonacci give you a sense of how strong a trend is. So if I'm going to stop sharing my screen there for a second, because I want to go and share something else. Hopefully I can show you this image. Okay, so this image here, what's important about this image here is that it's showing you, so in this case, we've got an upward trend and then a retracement. And what it's showing you is when you've put your fibs up, so you've got your fibs up here, they're not showing all the fibs here, but they're showing some of them. So they've got the 38%, the 50%, and the 61%. So we've got price going up, and as it starts to retrace, if it bounces off the 38.2 and starts to go back with the trend, this indicates it's a strong trend. It's not managed to retrace very far before it starts going back up again. So that tells you something about how strong the trend is. Now, if it comes back to the 50% and then starts to go back up, that's a kind of a normal retracement. That's where, you know, the probability is when a market's in an upward trend, when it retraces back somewhere between the 50% and the 61%, that's a normal place to look for a buy, where when it starts to go up from there. If it goes below 61.8, then we're starting to look at something that is a weak, the trend is weakening, because obviously the impulse on this upward trend has come from down here and gone up to here, and it's managed to retrace, and it's come back almost as far as where the initial impulse was. And then if it starts to go up from anywhere down here, and I'll show you the levels on the chart in a sec, then we know that trend is a bit weaker because it's actually managed to retrace much further down towards where the original impulse came from. And if it comes down to there and then starts to go back with the trend, we need to be thinking about taking profits and coming out of that buy, because we now know that the trend is weakening, and there's a strong possibility that it may well start to come back up into our buy trend bias. But because we now know it's a weaker trend, we could be finding that it may not go that far before it starts to come back down and start to reverse again. and we're looking for a potential new trend coming. It may well come down below the 100%, which is on this illustration shows you this is a reversal signal. So obviously we know that if we're looking at an uptrend and we get a retracement, but in fact it keeps going in, it goes past this 100% level here, in other words, starts to create a lower low, lower than this original low where we started measuring from, and it actually goes below that, we know that we're obviously, we're looking at a potential break of structure, and that now the market is reversing from an upward trend into a downward trend if it goes past there. But even if it doesn't go past there and it comes down to, and I'll show you again in a minute on my full Fib setup, if it starts to come down here between the 80 and 90%, but does then start to go back into an upward trend, we know at that stage we're actually now in an upward trend that is weakening because it's managing to reverse a lot further than one that just comes down to the 0.38 or the normal range of 0.50 before going back up. And I hope that makes sense. And I'm going to stop sharing that illustration and I'm going to go back to my chart setup over here. Okay, so just to reiterate what I was saying there, now this is one where we're looking at a downward trend. So where the trend is coming down, so we've taken our Fib from this high down to this low, and we've started to get this retracement, and it's come above the 23.6 on this illustration and started to go down again. So what does that mean? We know it's a strong downward trend because it didn't manage to retrace higher than this between the two white lines here. Now, what does he calls this his white hot zone. That's the white hot zone. So if it retraces to there and then starts to continue down on the trend, this is a strong trend. Now, something else, the 23.8, the 23.6 line has another purpose, as well as giving us this zone here for the white hot zone where if it reverses, it shows that it's a strong trend. The 23.8 is also, the 23.6, sorry, is also important because when we put our Fibonacci on here, so we've seen price go from this high, comes down to this low, and it starts to reverse. And so when we see that, we think, well, I want to put my Fibonacci on to get a sense of, where it's going up to and where it might reverse from. So we come on and we put this Fibonacci on. Now, this Fibonacci that we put on does not become valid or active until price goes past the 23.6% level. If price only comes up, let me just do this again. If price only comes up to this point below the 23.6 and starts to go down from there without having hit closed above the 23.6, this Fibonacci isn't a valid setup. You want to remove that Fibonacci off your chart because it only triggers and becomes a valid Fibonacci when price comes back up above the 23.6 level and closes above that. Then we know our Fib setup is active and we can then start looking to see, where it's going to come to. So the highest percentage when it comes to retracement is between this 50 and 60% where we're going to be watching for reversal and buys. Reversal and sells, sorry, we're on a downward trend here. So when price is going down and it creates a low and starts to come up, we draw our Fib. Once it closes above the 23.6, we know our Fib is active and we can use it. And then we're watching to see if price comes up between the 50 and 60, percentage-wise, this is where we're going to get the majority of our reversals. This is what gives you an edge in the market. When we can put a Fib up and we can see price coming up into this zone, we know that this is where there's a high probability that it's going to reverse from, and we can look for sells. Now, in case you're wondering, how valuable is this? How valid is this? Well, the banks use Fibonacci's. Now they have setups with algorithms that look for these reversals, and they call them high frequency trading algorithms. Now that's a bit confusing because we talk about HFX when we're looking at a whole different style of trading. When we look at binary options, we call that you know, high frequency trading. But in actual fact, in the banking world, when they talk about high frequency trading, they're talking about these algorithms that look for reversals, and they're looking specifically at Fibonacci levels. These algorithms are set up to look for trades at these levels. And they're called high frequency trading because they can put on massive amounts of trades in a blink of an eye when triggered by the algorithm which is looking for these levels. So, you know, when we start to use Fibonacci and we start to use it properly, you know, we're doing what the banks are doing, you know, and we all know that banks trade every single day, and more than 90% of the days in the year when they trade, they win. And they make massive amounts of money because they're putting massive amounts of money on. But if we start using the Fibonacci and start using it correctly, then we are massively improving our odds and our probability of getting correct setups. Now, of course, you know, as with everything in trading, is no guarantee. Price doesn't have to do, you know, what we expect it to do. But this is what we're looking at high probability setups. Now, if again, if we've seen price come down and hit this low, and so we put the Fibonacci up, and we watch and we see price actually comes past the 50 to 60% zone, which is the high probability area, and it starts to come up to here between our 78 and our 88 level. This zone is what Curtis calls your last zone of defense. This is kind of the last area where we're going to see you know, maybe a reversal come, and when it does go up as high as this and reverses, we know that the trend is weakening. And so if it comes up here and starts to reverse, that's great, because hopefully if we're already in a sell, if we were already, you know, if we'd already taken a sell up here and we're seeing this retracement, and we're keeping an eye on the retracement to know whether or not we want to stay in the sell, and we're thinking, well, the high probability is going to come up to here and reverse from here, and if we're not already in one, that's where we would place our sell trade. But if we're watching and it's coming back up higher, then of course, you know, as a trader, if we're already in a sell, we're getting anxious, aren't we? Because we're expecting it to continue with the trend and reverse, creating a lower high. So we've got our high here and we've started to sell and it's retraced up, and we're looking for it to create a lower high so that it continues in the trend. And of course, the higher it comes, the more we're worried about the fact that it could actually extend up and go beyond our previous high over here and create a higher high, in which case we're now looking at it and thinking, oh well, it's no longer trending down, it's breaking the trend and it's going up. So we're now looking to reverse our whole psychology and thinking that we're looking now at a market that's trending up. But let's say it comes up into here and it reverses from this level between these two levels here. And that's our last line of defense. And we know that if it starts to go back down with the trend, this is now a weaker trend, and it may well come back down and keep giving us some profit. But we need to realize that this is now a much weaker trend, and we need to be thinking about taking our profits and coming out of the trade, because the odds are it might continue down a bit, but at some point it's going to start reversing back up. And so what we would do in that instance, let's remove my fib setting. So it came back up here and it went up into this area of last defense and started to go back down with the trend. Well, that's great. We're still in profit, but we know now that this is a weak trend. And so what do you do then? Well, if the downtrend is now weakening, we're looking for the possibility of buying. So now we would come back and put our fibs on, but now we're going from low to high because we're looking for a buy. So we realize that the trend is weakening, so we've come out and taken our profits, and we're now watching to see as it comes back down, is it going to totally continue the trend and give us a lower low? Or, as we know the trend is weakening, is it going to come down into here and maybe start going back up and start giving us an uptrend? And so, you know, basically, because of what happened and where it retraced to, we realized that we were potentially looking at a weakening trend. And so there was a potential, we needed to come out of the trade, take out profits, and then keep an eye on it to see, well, is it going to reverse and start going into an upward trend? And that's when we were able to put this new fib on to see, you know, where might there, if it's going to go into an uptrend, where's the reversal going to come from? And once again, though, don't forget that, you know, this fib only became active as long as the price pushed down and closed below the 23.6 level. So that having been said, I mean, that's pretty much the basics of what we're looking at. There's much more detail to go into. There's much more to think about in terms of, you know, how we continue to use the fibs. And we keep, you know, for example, I've just changed from a fib looking for continuation going down, and I've now put a fib on to look for a potential reversal going up. And the other thing, if I just take, if I just remove, I'm just going to remove the drawings off there and just come back to just sticking a fib up. So here we go. We've got our just plain Fibonacci up there at the moment. So one of the things that we're doing when we're using the Fibonacci, and we've got a price and we've seen maybe what have I've gone high to low there. So you know, we're looking for, I've gone low to high, so we're looking for a buy if we're using that fib. So but so we, you know, we perhaps put this up because we're in an upward trend and we're looking at a reversal and seeing where it goes. Now, one of the things that Curtis always does is he will mark up the zones. So we know we've got between 50 and 60, you know, this is where the high probability of reversals will come, okay? So we mark it up. So in other words, we've seen the price action. We're in a market that's going up, and we've got our price that's heading up. It's gone up to here. And it started to reverse. So price was going up. We're in a buy, and it starts to come down. It starts to come down. So when we saw it start to come down, we put our fib on from the low to the high because we're looking for a buy. So we're looking to see how far this retraces. And once we put our fib up and it's gone past that 23.6 and the fib has become active, that would be when we might draw up our 50 to 60 zone, because that's the high probability where it's going to come to, and it's going to reverse up from there. Now, the other thing to just think about is so we've drawn up, we've put a fib up, and we've put this zone in here. That's where we're looking for it to come down and start going back in the upward trend. But in actual fact, if it only comes down into 23, between 23 and 38, and we actually start to see it going back with the trend from there, as we said before, we now know that this is a strong trend. But one of the things he cautions about, that doesn't mean to say when it reverses from there that we immediately look to buy. No, you want to hold on, and you want to see it come up here. And then we're going to look for where it comes back down to next. and you would be looking to take your buy from there. Okay, so if it reverses, it only comes this little way down, it breaks the 23.6, so the fib is active, but then it starts to go back with the trend from there. We know it's a strong trend, but we don't take our buy straight away. We wait for it to set a new high and then retrace, because generally speaking, when we've identified this as a strong trend, when it comes back up and it retraces again, the next move is likely to be explosive. It's likely to be a big impulse move, because Fib here told us that it's went back on trend from the white hot zone, meaning we know it's a strong trend. So we're going to look for the next reversal to take our buy from there, because this is our confirmation that it's trending back up and it's a strong trend. So that was our confirmation. And then we look for the next dip to take our buy. Okay, guys, now I hope that's been useful. There are some added and more complex bits that go on from there. And we perhaps go into that on another session. We can also start looking at the next thing that we look at once we've got the hang of using the Fib retracement tool, is we start looking at the trend-based Fib extension, because the trend-based Fib extension allows us to that allows us to actually look at where we may put our take profits. That's the tool that gives us the levels that we might look at. Once we've used this, once we've used this Fib, and let's say it's reversed, as the high probability will be reversing into the 50-60% zone, and it's done that, and so we've taken our buy here, and it's going up. Well, we can use the Fib extension tool to actually then tell us, well, where's it going to go to? In fact, I might do that. But whilst I'm doing that, the other thing I just wanted to point out, this purple line on the 83 here, that if it reverses in the 50-60 zone, then this purple line is where we would put our stop loss. So if we're using this to look for an entry, and it's gone into the 50-60 zone and started to go back with the trend, and so we go, right, I'm gonna place a trade, a buy from here. We can use that purple line, the 83, whatever it is, 83 point. I can't actually read the numbers there, but I did tell you what it was. It's the 83.5. That would be where we would set our stop loss. So our entries here in the 50-60 zone, and then the purple line gives us our stop loss. And then if we take off the Fib, take off this Fib, we can then use our the trend-based Fib extension to look for, well, where's it going to go? We've rightly identified that that it was, the probability was that it was going to go up from our purple zone, but how high is it going to go? So you put your you then go for your the Fib extension, and you go from your low to the high, down to the level here in the 50-60 zone where it actually started to go back up from. And if I push down, you'll see that this gives us a couple of TPs, if you like. You can use this as a perhaps TP1, and the 1.618 is where we would be looking to go. So we can actually use those levels using that the Fib extension tool to actually give us a potential take profit zones. Now, the only other thing I'm going to add to this, I'm just going to remove all my drawings from here, and actually go to the now this chart I've got. Let me remove Yeah, let's go back to a naked chart. So this is, what am I on? I'm on the US dollar, Singapore dollar. So, you know, we can do it from, you know, looking at this. So if I'm presuming, let's go up to the 1 hour on the chart. So this, so this is the 1 hour chart on the US dollar against the Singapore dollar. And I'm just going to sort of pull out a bit to get a sense of what kind of, where are we with this? So we were, it looks like we were uptrending, and then we've got a reversal here where it started to give you a lower high, lower low, and another lower low here. So we've actually gone into it's downward trend. It's come into downward trend. So if we were using our Fibonacci levels, our Fibonacci tools, let's go to the Fib retracement. So we know we're downtrending, and let's say, you know, we take from the high here and we go down to the low here. Now, remember as well, when you're drawing your Fibonacci's, you're always moving left to right. So this one, we're in a downward trend, and we've taken it from high to low to see how low we can go and see where the retracement was. Now, in this instance, it actually went into it went up into this, the higher, the red zone before it started to retrace. So that shows us that, you know, when it retraces that much, when it goes up that much, when we're looking for a buy, and we're looking for a sell, sorry, you know, we're in a downward trend, and then prices retrace, but it's gone all the way up to the 60-80 zone. That tells us that, as I was saying before, that means that the downtrend is a bit weak. So but it has reversed from there. But as I said before, where we really, because it's gone up to the 60 to 80 and although it's continued to then go back down, we need to be thinking about coming out of that trade and taking our profits. And lo and behold, what happens? Yeah, it comes down a certain amount, but then it actually reverses and goes back up again. In actual fact, we're in a bit of a funny zone here now, where it's really entered an area where it's neither really showing us clear indications whether we're in an up or a down trend. But nevertheless, it showed you there that, you know, as we said before, that indicated that the trend was weakening, and indeed it didn't continue back down as we expected. It came so far and started to go back up. And if we take that Fib chart off, and we actually look, because, you know, as we said, it went up into that red zone where that gives us an indication that it's weakening. And in actual fact, we could have then, you know, because we were aware that it was weakening, we could have come here and put our, oh, that's not what I wanted at all. That's what I wanted. So we could have come here and done a Fib from low to high there. And guess what? We thought the trend was weakening. And so we put a new Fib on, and lo and behold, it's pushed back down, and it's come to between the 50 and the 60 as we thought, and it's gone back up. Now it has retraced again, but it's also come to the 50, 60, and it's gone back up. So we used our Fibs there. Initially, it was in a downtrend, and we put the Fib on to see, you know, how far this was going to retrace, and it went really high into our red zone between the 80 and the, what is it? It's the 83 and the 90. It went up into the, so we knew that this downtrend was beginning to weaken. So we put another Fib on here to see, well, if it's weakening, where might it reverse from? And so it started to come down, and lo and behold, it hit the common area, the most probable area that it will reverse from, and it only came back into 50 and 60 and started to go high. So that's how you can use your fibs to actually give you strong indications of what the market might be doing. I mean, I just randomly had that chart up. I hadn't looked at it before, but it just goes to show that if we're using the fibs, it gives us a strong idea. You know, if we hadn't been using the fibs and we're in a downward trend and we see it's gone up and it's coming back down, we might just sell because we think, well, it's coming back down. But because we used our fib, we realized that the downward trend was weakening because it managed to pull up so high, and therefore we ought to be thinking of coming out of our sell and cashing in. And lo and behold, what happened? It did. It only came back a little way, didn't continue in our downward trend, but started to reverse up. And actually, by putting the fib on here from the low to the high, we saw it actually come into the 50-60 zone where it's most likely to reverse, and it reversed and started to go up. Okay, guys, look, that's a basic session. I'm not an educator. I'm just like you guys. I'm learning, but I do hope that has, I hope that, I'm just going to stop sharing my screen. Oh, yeah, so I'll just stop sharing my screen. That's kind of the basics of what Curtis Kobane teaches. And I hope you can see that if you start using Fibonacci's, you've got a much better chance of accurately predicting when things are going to reverse. And even, you know, to give yourself an indication, you might have been in a very nice sort of downward trend and you've been in a nice sell. But when you saw that retracement, and I used the Fibonacci, we then saw that the retracement actually went up to a higher, you know, the red area, and therefore that showed us that that downtrend was weakening, and that would have been our first clue to be looking to get out of that trade. And so as it started to come back down, we could have got out of that trade still in profit. And actually, when I then used the fib to see, well, you know, how far will it go down, it actually went into the most frequent area for retracement. It hit the 50 and 60 and started to go back up. And it showed that our downward trend was starting to break down, and maybe we were going to start going into an upward trend. Guys, I hope I've explained this reasonably well and clearly. As I say, I'm not an educator. If you really want to get the real deal on this, you want to get onto Curtis Kobane in the DCX Academy and watch his videos on using fibs, because he is the best educator for this. You know, as he points out, although he's a DCX educator, fibs work on everything. They work on gold, they work on silver, they work on indices, they work on Forex. So once you start to get the hang of using fibs, your probability of making money in the market will be massively increased. Okay, guys, I hope this is useful. Not an educator, just putting it out because I know not everybody's got access to Curtis Kobane at the moment. So, okay, take care, guys.